back, guys, and in today is gonna be a special episode. It's gonna be a continuous episode of the last one with our go-to mortgage expert with Jorge. And as Leo promised last time, what we're gonna talk about?
$50,000, $35,000, $7,000 for free. I'm serious.
That's right. And for you, new real estate agent out there that's trying to help your client get the best deal possible, we're gonna have a ton of information for you to go by. And with our lender here in-house, we're gonna get started.
For a lot of buyers, just because they think, I don't think I can buy a home, they just cancel the whole purchase idea completely from their mind. This is what I see every day, but they don't realizing that is no. Most of you guys who cancel this idea, you can afford to buy a home. So, and they bother to call me as an agent or to call a lender to ask. So just give me a math play here. How anyone watching us now, he can just qualify himself, and I say qualify, not approve or anything, to see like, can he call an agent or a lender or not? Just give me like a numbers, what he should have.
When you say numbers, what do you mean?
Like just examples. For example, if you make this, you have this, you can afford this.
So I never like doing that, only because you're basing it on numbers without knowing what kind of debt they may have involved.
Okay.
So I could tell you, let's say we went with 300,000. You know, you're gonna need to make around $70,000 or $60,000.
300,000 home. You need to make around
$60,000
to $70,000.
Right, but
regardless of everything else.
No, right. Well, no, without counting anything else.
Debt or all these things.
So that's where I don't like giving that number. When people ask me that, I tend not to. I tend to help them understand.
So what you tell
that
these
you
people,
don't want to go that route, because you want to make sure if you know there's debt, that we go over all your debt to make sure that you can qualify for what you want.
For these people who bother to call us, me or you, I want them to call us to have really the dream home. How you make them call you? Like I know, like, because they think they have a lot of debt, they have a lot of bad situation. How you make them like, hey, no, you're good, just call me, and I think you can afford it.
Yeah, absolutely. And this is where you guys are usually the first people they're going to call.
Correct.
The real estate agent. Because why? Because they saw something they liked. They saw a house that they potentially saw themselves in. And that's where, you don't want to have the customer auto qualify themselves. Okay. And that's something very common. Like you just said, everybody thinks they can't own a home, or a lot of people think they can't own a home. I rather you don't just know call. Until you call. You have to talk to my guy.
Do you charge if somebody called you?
Zero.
I don't charge either.
I never charge.
No, I don't.
No
charge.
I don't.
You do charge.
Sometimes I
calling
charge.
You, man.
If someone calls a lot, I start charging.
I mean, really, like, just call. Like,
and that's what a lot of people think, that if they start talking to me, I'm going to charge them something just for the phone call. And I'm like, no.
It's not like a lawyer. If you call the lawyer, it's like,
I wouldn't have mind.
$200.
Right. $200 an hour.
I think some people really doesn't call because they feel like the minute I call, now I'm obligated to move forward with anything. And it happens with us. Like, if I call a realtor, now I owe this realtor something. You don't owe me anything.
Not at all.
We are in this industry to help.
Absolutely.
And we don't really get paid when we call you or we talk to you, or we get paid when we provide you with the help you need. So the main thing we're looking for is to help that client, and at the end it's a win-win situation. And in order to help, we provide education at the beginning. So we literally don't feel we like you to call us. We like anyone to call us at the first
I agree.
beginning.
I tell everybody, just call me any question, because I may know a lot or believe I know a lot, but if this is your first time buying a home, you're the way I was when I bought my home at 20, 21 years old.
There's a lot of options.
There was so much information that I was like,
exactly.
It
does feel overwhelming.
It does feel overwhelming.
So give me the privilege to say it.
Right.
If you have student loan, if you have credit card, if you have car, if you have any debt, if you think your situation is really bad, I think you still can buy a home.
Right. And you can. It doesn't mean, it could be that you could buy right now. And it doesn't mean that you have to buy right now. It can mean that we prepare you with knowing where you're at, what you need to do, create a game plan so you can buy 6 months down the line, a year down the line, 2 years down the line. I've got clients that have called me 3 and 4 years down the line. called me back just because we created a game plan, we created a situation of what they needed to do, what they needed to provide, get their ducks in a row, and then be able to purchase the home.
I don't know if you memorize anything, but anyone called you, he think he cannot afford to buy a home, and surprisingly, he could.
All the time.
Tell me a story. Like someone like he called you, like totally like, oh, I don't think I can buy a home. I have student loan. I have car. And I'm like, no, you can. FHA 3.5%. You got it. Next 2 months you are.
Absolutely. Well, and I never I don't want to mention somebody specifically, but
just a story.
Right. So I have always customers that just believe that that they can't afford the home. Why? Because their monthly payment's going to be too high, but they're already paying rent. If they're paying rent, the way I tell customers, if you're paying rent, you can afford to buy a home. You could always afford to buy a home because you need a place to live. So why you're actually already paying a mortgage. It's just not yours.
Maybe to put it in a better perspective, if you are qualified to rent in Florida, and especially if you're qualified for an actual renter, not just going from right to left and getting the rent anyhow. No, if you're qualified with 3 times your income and you got that rental in, you probably overqualified.
Most likely.
And you can get that loan in. Because again, there's lots of moving pieces, and I know debt to a ratio income and those stuff plays a big part. But I want to go back on a very important point that we deal a lot with our buyer, which is the pre-approval, and why is it important at the beginning, at the first stage, before we even start to look for that home. Why do you think it's really important?
Great
or
question.
do you?
So I definitely think you need the pre-approval in order to to go out there and know what you're getting yourself into. And even a pre-approval doesn't mean that that's what you want. I know people that sometimes get pre-approved for 500,000, 600,000, 700,000. Oh, I could buy up to 700,000. But when it gets to the monthly payment, well, that's not the monthly payment I want. That's not the monthly payment I see myself. I have family, I have kids, I have insurance, I have other lifestyles. You don't want to just live to pay your mortgage. You need a life outside of that. And that's one thing that I tell customers. Just because you got approved up to a certain amount doesn't mean you have to buy up to that amount. It just means you qualified to there if you really want to get to that point. But we want to make sure that they understand what they're looking at as far as a total monthly expense between principal, interest, taxes, insurance, right? The numbers. That it's super important that customers understand where their numbers are.
I always put it this way to my buyers. I tell, if you don't want to be driving blindfolded, you gotta go get that pre-approval.
Right, and that's exactly it.
If you want to drive blindfolded, just have a Tesla.
If you want to drive blindfolded, call Leo. He doesn't tell you to get pre-approval.
I will give you a autopilot in my Tesla.
Yeah, you definitely want to get pre-approved up front. You want to make sure you understand what the process is going to entail once you're under contract.
If somebody want to have a pre-approval from you guys, what they should provide you?
So it depends on the person.
Basic,
just basic. Don't go deep in there.
Yeah. So if you work for an employer, you're needing pay stubs, W-2.
For how long?
Just a couple pay stubs for the month, 1 month of pay stubs, W-2 for the last 2 years. And W-2 means the form that the employer gives you, not your tax returns.
Of course, yeah.
Okay. A lot of people sometimes think W-2 and tax returns are the same, but
it's the same form that they use to file
your taxes. Correct.
So the one you get in the mail.
Right.
Yeah.
Right. So W2. It's the W-2 form, a month or two of bank statements, and that's basically it.
That's it.
Very simple.
And what they're looking for as debt to income ratio wise.
So if you were going with FHA gives you the max amount back end ratio, which means principal, interest, taxes, and insurance, plus all your other debt, which you can go up to 56%.
56?
56.
I thought it's 40 something.
No, it's 56 on
56,
right.
Yeah.
56 for FHA. If you're going conventional, you're up to 50. Okay, so it's half. If you're going VA, sometimes it can go a little bit above 56.
That's actually a great. So when you say 56, that's just over half of what you make can be a debt.
Yeah, a little bit over half.
Qualify.
And still
of course,
qualify.
That we're talking including the mortgage payment.
Right.
Including
the mortgage payment. Principal, interest, taxes, insurance, plus all your other debt. cars, credit cards.
Like, I feel so special when I become.
You're special, my brother. I will tell you, you're always special.
You make me shy, man. Oh my, thank you. Thank you. Oh.
Special for me.
Oh, thank you. Okay,
I'm going to ring the bell. I'm going to ring the bell.
We're going somewhere, right? Like,
Yeah.
That's why it's so bad, man. Don't do it again. Okay. I forgot. So, what I was going to say.
Your title is special?
Okay. So I was saying that I feel really special when my best friend is a lender. Because lender really have a lot of power to provide. They can show you the options. They can show you all the cards that is you really have. So anyone watching us, if you have a lender, you better be a best friend with him.
Oh. And it's not just we work as a team, and that's the great part. I always tell agents, you need a lender, you need somebody that you can go to for any kind of questions, whether it be for the deal you're working, and I may not be in that transaction, I may not be the lender on that transaction, but you have a question, call me. That way you start understanding what's going on that other end.
And we really appreciate that. We get that from you, and you're such a helpful person. Even the deal has nothing to do with you. You still help us with figuring out some challenges.
Yeah.
So I give you credit for that. Thank you.
So I want to touch base on something that's really important.
Out of qualification and
yes, you still have something there?
Yes, we want to go with the requirement. Now we know the qualifications, but we know the requirements, the one you just mentioned, the pay stubs,
the documents needed.
But what's their qualification going credit score wise, and payments, how much they make when we talked about, but mostly credit score.
So you could do, we can do up to 500 credit score.
500.
500.
As low as 500.
As low as 500.
There is no lower than 500.
There is a lower credit score than 500, but yes, we can do up to 500.
Wow.
And but that 500 might have lots of things on it, like collections and stuff.
It can, and it can, but there are lenders that are able to work with those numbers.
So if you have a 500 credit score, you can possibly
still
buy a home.
Yep.
And that could be FHA or conventional?
No, not conventional.
FHA.
Conventional is a 620 minimum credit score.
Okay. So conventional 620.
Anything. Just
FHA can go as low as 500.
Just give me a home.
Wow. And what would be a remark or something on the credit report that would be a red flag for you if you find it there? I'm asking this to help our viewers to avoid those pitfalls if they're trying to buy a home.
The main pitfall you want to avoid is stopping payments on anything. Okay? Because the way mortgages work, they want to make sure, they want to see what your payment history is like. If you're paying credit cards, if you're paying car loans, if you're paying installment loans and you pay them all on time, well, that's a good candidate to be able to purchase a home. If you're not making payments on stuff, well, we need to know why. What
Lower
happened?
risk,
It could have been
risk.
It could have been a certain circumstance that happened. Where you lose your job for a few, and then you're back at it, making payments again and things like that. It's still doable. But you want to make sure if you're that you stay on top of your credit. You could always go to any of those free websites that give you give you a rating of where your score is at, or checking your credit, freecreditreport.com, or even your credit cards. If you do have credit cards, or your bank, most of your banks give you
nowadays
the ability to free. There's so much information.
Tools everywhere that will give you those
yes,
information.
Absolutely. There's so much information.
It's easy for our buyers to do their due diligence.
Just to know where your credit, not necessarily to know the exact score you're at, but just to give you an idea of what is on your credit.
Be in the top of your credit score.
Mm-hmm.
Well,
that's nice.
Yeah. I think with that, at least the buyer now has some education on what kind of score that can be financed. And with Jorge, our Superman in mortgages.
Superman.
Yes, because he just said even 500 can be financed. Even with everything on your credit score, you still can get financed.
Superman. He bench pressed maybe like 50, 60 pounds. What you do, man? He's like killing me every time I see his arm.
So just to end this segment, what's the best practices that you would call the holy grail of the qualified buyer?
There's no holy grail of a customer. Like every customer is going to be different. Every single situation.
I'm an 800 credit score. Are you gonna treat me like 500 credit score?
I'm going to treat you all the same. Everybody's the same. And the reason I say all the same, I'm looking to how to get you into your home. Same as the 500 credit score. The score doesn't really change how I do the.
But they change the terms.
It just changes the terms, and
that's what I was going to.
Yes,
yeah.
correct.
What's the best practice to get the best terms?
So the best term is obviously having the better credit score. The higher a credit score, the better the rates, the more potential there is for more lenders or more banks to want to have your business. And that's
I agree with him. I have brought to George to work together at some buyer. I remember him. He had like 805 credit score. He cannot qualify for a few things. Why? Because something else. So really, credit score is not everything. 805 sometimes is okay. It's like 500 literally, as you mentioned.
Yeah, but and again, we work with every single customer to try to help them understand what documents they may need if they're self-employed. They need tax returns or bank statements. We have all different types of programs for everybody, and that's the best part about it being a broker versus a bank.
So for people like me who's really proud about their credit score being so high,
excellent.
I want to tell myself and people like me that means nothing.
No,
if it's not backed up by the proper document and the proper practices.
So no, I always, I commend anybody that has a good credit score that understands that credit in the United States is very, very important.
That's right.
For anything you want to buy, not just even purchasing. It actually helps you on insurance, everything.
True.
It does help. It gives you discounts for having better credit scores. So the idea of every person can get to that credit score. That's the ultimate goal.
No, I agree.
To get everybody to that point.
You mentioned just like a few seconds ago the difference between the broker and the lender and all this. So. As someone, I know a lot of buyers, and I just want you to touch base on this. What is the difference if someone will go straight to you as you broker, mortgage broker, or he will go straight to the bank to get a loan for him home? What is the difference between the bank and you?
So the bank
and what is you guys like? Are you lenders or broker?
So we are brokers.
Okay,
that's the number one. And I'll explain a little bit the difference with a bank. A bank has only a specific set of guidelines that they can go with, a specific programs. If the program or you, the customer, the borrower, doesn't fit within those programs, they don't have a loan for you. With a broker, the difference is I work with multiple banks. I look for what bank fits your criteria and what you're looking to do. So I can work with 20 different banks, not have to run your credit. And that's another misconception. A lot of people always think, a broker will run my credit a million different ways. No, we only run it one, but we could check with 100 different
Thank
lenders.
you for touching on that.
Yes,
we get that challenge a lot from
I get that. I get that as a challenge as well, because they believe, I'm going to run their credit, a million different times. No, I run it once, and with that one, I can check 20, 30, 40 different banks.
So it's always better to work with a broker.
Absolutely.
Better than just work with the one bank.
Absolutely, because if it doesn't fit within that one bank, well, there you just ran your credit once. Now you're going to go to another bank, you're going to have to run it again. If you go to a third bank, you're running it again. That's 3 different banks. Versus a mortgage broker, I could have already checked all 3 of those banks all with one.
And give you the right one, the perfect fit for you.
Right, absolutely.
Okay, that's really important.
So yes, I get that. You, as a mortgage broker, you do provide multiple options. But do you really provide the best deal? Or is it like you provide what the banks already provided plus more options?
No. You always get the better program, better cost per loan through a mortgage broker.
Why?
Because mortgage brokers work with banks or lenders that only deal with mortgages, meaning they don't have the other extra overhead. They don't have the brick and mortar checking, savings, front desk teller, all those people that have that are extra expenses that you deal with a bank.
So it's easier to go to a broker than going to the bank, because I remember one of my client, he was working with one of the banks to get qualification and everything. He got the pre-approved, but they were asking him a question. That is like really annoying question. For example, you got divorced 2 years ago, but we saw you selling your ex-wife X amount every month for 3 months. Why? And when did you got divorced?
Well, that's that.
Did you ask this question, guys?
Absolutely, we'll ask that as well.
Really?
And that has to do with, we want to make sure if you haven't disclosed it,
Okay.
that's not a debt that
$200 every month you're going to ask about it?
Absolutely, because that's still a debt. What if it is child support?
Okay.
So
Yeah,
that
that's
has to
what
be
makes the
disclosed.
difference.
It's
Okay,
a
now
debt that
makes
you have to
sense.
disclose, and it's not that we're invading the customer's privacy or what. It could very well not have to do with child support. It could very well be, I just wanted to give her extra money because she asked me for it. You know, if there's that explanation, that's doable too. It doesn't mean that it has to be something specific that we're trying to watch out, but we are banks do, and it's not us. It's going to be the underwriters, the people that back up the loans, that sign off on these loans to be able to be sold in the secondary market.
Okay.
So they do ask that, and that's not just a banking question. That'll be an every lender question.
No, thank you for letting me
Yeah,
know that.
absolutely.
Actually, I thought just the banks do this.
Absolutely.
You guys are knowing as well.
No.
I told you, we're learning as our buyers.
Yeah.
We're always learning every day, especially with George. He always have something
No,
new
he's
for
amazing.
us. Now, George, what you mentioned about differences between brokers and banks are great. But now when we go back to Florida, Florida does hold something more special. Like, I do get some buyers that have great lenders, still lenders. They're not banks, still lenders, but they are all out of state. And those lenders, even though they're good in general, but when it comes to Florida, it's really out of their arena. And I wanna know more with my buyers. Where does it come that you guys, as lenders in Florida, as local lenders, that really have more advantages over the lenders from out of state?
And those are good questions. The one thing I tell customers is we are in this area. We know this area. You know, I've been living here for 20 plus years. So we know, taxes are a bit higher than what outside lenders, like out of state lenders would calculate, because they're calculating based on the average of the United States. Here, where the taxes are going to be a little bit higher. Here, insurances are going to be higher. So they're using the average maybe in their home state, where they don't have flood insurance. They don't need flood insurance. They don't need windstorm insurance. Here, these are items that we
They don't know
that
what's
we have to
master
calculate.
insurance mean.
A master insurance policy? Yeah, right.
That's right. They call
and that
it
has to
something
do
else.
with condos.
Yeah.
Right. That has to do with condos.
They don't know the ins and outs of what's going on in Florida and what it takes for a Floridian transaction to get to closing table.
Absolutely.
Which takes a village, as we started in
Yes,
this transaction, in this episode. It does literally take a village. And when dealing with a local lender, as the experience we had before, it just feels more like, when to be out, when to be in, you know what kind of condos you're dealing with and what document you ask for to get that loan committed in time. And going back to committed, George gets loans committed as low as how many days?
So we do have
As
programs
fast
as
and
fast
that's
as
a great
10
big
days.
deal.
We have a 10-day clear to close
10
program. 10
I
days
get it from
guaranteed.
George.
Get
Just
me
let-
out
let's
of
just-
10 days
state lender that
guaranteed.
can do
As
10
long as
days.
it's a single family home or a townhouse, we can get it clear to close in a
Just
matter of
last
10
week, you
days.
gave me the 10 days. That
Yep.
was amazing.
Yep.
No banks can do 10 days.
No, clear to close in 10 days?
No.
Do you know, guys, what's mean like clear to close? That's mean like you done. You
Yeah.
can literally go to closing
Yeah.
and close. Bye-bye.
Yeah.
That's right.
Yeah.
All right. So we were talking about the down payment. Lots of the buyers out there still believe that the minimum down payment to buy a house is 20%.
20%.
I was one
And
of
they
those
want to
people.
debunk this myth once
I
and for
hear
all.
that every week at least once. A lot. And I don't know where
We don't
it
even
came
get
from.
it a lot. Like, when the last time did you do 20% for someone who wants lower?
Yeah, it does happen, but it's not usually the norm. The norm is we can do loans whether you're a first-time home buyer or not, it doesn't even matter if you're not a first-time home buyer. You can go with as little as 3.5% to 5% down. And that's all you need to be able to purchase a home.
Where did that 20% come from? Why there's so much people still believe it's 20%?
So 20% is a thing based on if you're trying to avoid mortgage insurance, PMI, and that's probably where it mainly came from. Oh, you need to put 20%, but they forgot the other half in order to avoid mortgage insurance, the PMI, that extra percentage that they're charging, the banks charge, because you're putting less than 20% of the property.
So
is it really worth it? Is it worth to go above 20% to save on the PMI?
Well, if you're trying to save the money, yes, it can be. But before you ring, all right, go ahead.
Wait, let him finish. Come on.
No, go ahead.
I want to do it that way. I want
He's
to feel it.
You know, he just enjoys that interruption.
We still have
I think I think you're done. I think you guys are done with this.
Maybe this time it's gonna irritate you, but next time you say it on someone else, you're gonna feel yes. To push that interruption.
You guys mentioning the PMI. What is this?
So PMI is an extra insurance that you pay for to protect not you. You're actually protecting the bank. So it's an extra insurance policy that the bank places in case of foreclosure.
When should I have a PMI?
Which is the PMI.
When should I have? When would I have?
When is it required?
Well, it's required if you do an FHA loan, and it's required if you're putting less than 20% on a property.
Anything less than 20%, I'm going to have an insurance.
You're going to have an extra
FHA loan.
insurance.
It doesn't matter.
Whether it be separate on a monthly payment, which is the PMI, or if you have it within the actual rate.
Will it bring my monthly payment so high?
No, and that's the common misconception that it'll bring your monthly payment. Like I said, it's about 0.5%. Okay. So if you're talking about $500,000, it's $250
monthly.
A monthly.
That's nothing.
Right.
Okay.
But again, once you have the 20% equity, you're able to request for it to be removed.
So to cancel, to
remove it.
To remove it.
Remove
okay.
it.
But do someone needs to refinance to remove it or no?
Only for FHA.
So FHA, they have to have the PMI,
if they keep that same loan, yes.
Okay.
But most people will refinance it into a conventional.
So it doesn't matter if they're paying 20% or 30% in an FHA, they still have to have that insurance.
Right, and not necessarily at 20 or 30, you're not necessarily putting them in an FHA loan. There, we're putting them in a conventional
It doesn't
loan.
make sense to have an FHA if you're
right, unless it's needed. We're putting them into a conventional.
So once
loan.
you have an equity in your home, 20% or above, you request refinancing and new appraisal to see the 20%
with FHA.
With FHA,
right?
And
with conventional,
then we can remove the
you can just request the bank
and
to
save
do
the
it.
money. Okay,
Absolutely.
That's why I interrupt you.
Leo, you didn't.
What happened?
He likes to interrupt. So Leo was telling me the other day, and he was literally he came home, he was crying, and he said, "I want to buy a home, but I don't have down payment." He has no money. So him, don't worry. I will tell George. He has solution for that. Do you have
down
a
payment
solution
assistance
for that?
programs?
Is it that what they call it?
Yeah, down payment assistance programs. There's
Can he go zero down?
There are programs that you could possibly get
There you
to
go.
there.
Don't cry.
I only can pay for inspection and appraisal. That's it.
So he
I
has
cannot for
probably
anything
like
else. Can I
2,000
buy a
in his
home?
bank.
So
2.5, yeah, 2,500.
Yes.
That's it.
and I would say yes and no, because
You said everything can happen.
Everything can happen,
Okay.
but you want to make sure we don't put a customer in the wrong situation.
Right.
Because yes, down payment assistance programs help. Yes, we have down payment assistance programs, but you want to make sure you have money yourself in case of an emergency. Because once you're a homeowner, things can and are now your responsibility. So if you have money just for appraisal, just for inspection, and you have nothing else, there you could technically run into a problem if your car breaks down. Well, is that going to cause an effect to not be
I
able
have
to
an
pay your
emergency.
mortgage?
Me and my wife, we have an emergency, but $2,500, just I have them to spend them. As an emergency, I have, but
Excellent. And that's what
and
we
I
want
can
to see.
cover the mortgage payment if I bought a home. Can I go to the closing table with zero cash?
I would say probably not.
How much minimum could I go with?
It depends on the purchase price.
The question would
Just
be
let
the
me go.
assistant program.
Yeah, but
How
let me
much
go.
can it pay?
So I would say it depends on the purchase price that you're trying to get to.
Let's say 300,000. I'm just giving an example.
That's what
to say,
the buyer want to hear. They want to
like-
hear a scenario to
like,
apply it on themselves.
I'm buying a condo, 300,000. I can afford inspection, appraisal, and all the small things. Can I go to the closing table with $0?
Zero, no. I would say no.
How much minimum should I go with?
I would say in order to be able to purchase a property, you want to have, anywhere between $5,000 and $10,000.
To purchase a property that's off $300,000.
Are you referring to
300,000
closing
there.
costs? You're referring to closing costs?
If you're going for closing costs, there I would say you need about $10,000 on a $300,000 property.
So what is the 10,000 if you break it down for me?
That would be your title company fees, your
Closing
recording
costs.
charges by the county, your taxes, and your insurance.
And that's still with the 0% down payment program assistance. So we're still going with the zero down payment, but the other expenses still have to come up from out of pocket for closing costs.
Or
Well,
you could actually get them from your seller as well.
Exactly, that's where I was going. Leo, just
You
get
can
it
get
from,
it from
the
the
seller.
seller.
No, since I
and
was
get the zero-
crying yesterday, can you give me the money, please, from you? Since
Yeah.
I was the
Or
buyer.
you can get a gift from a family member.
Exactly.
Thank you.
See,
Thank you.
I will give you some concessions.
Well, I need $10,000 concession, and it's called helping,
You
not
got it.
concession.
I will sell it right now. So tell me about those programs. The program we have here
So
in
right
Florida.
now available. Right now available. We have the first one is the $7,000 grant that Clear Choice is now offering that goes towards your closing costs. It's $5,000 towards closing costs, $1,000 waiving of our underwriting fee. $500 towards your appraisal and $500 towards a 1-year home warranty for your property.
That's not, and that's
Anywhere
from
in the
your,
state of Florida.
That's from
That's
your,
from us. We
land.
do
For free?
that program. Yep, that's a grant. That means you don't have to pay it back.
They don't.
No, that
Wow.
program you don't have to pay it back. Then we also work with down payment assistance programs for Broward County. Okay, and that there is those are qualification programs that you have to qualify based on the average medium income qualifications, and we check out what programs are available for you, and hopefully come July we believe and we know based on information that we gather from our lenders, Hometown Heroes should be back, which is up to $35,000.
Before we go to
for down
Hometown
payment
Hero,
assistance.
what is the assistance you mentioned about Broward?
So
How much?
Broward County's up to $50,000.
$50,000.
$50,000.
And I have to pay it back.
This is it is a loan. It's a silent loan, means you don't have a monthly payment, you don't have an interest rate, but it does have to be paid back. It doesn't have to be paid back, actually, I should say, as long as you've lived in the home and it's your owner occupied for 15 years.
You're telling me
It sounds-
$50,000, I don't have to pay it back. I can use it toward buying my home.
Absolutely.
That sounds too good to be true, honestly.
Well, it's not, and again, like
It's
I said,
free money.
It's free money. $7,000 is free money. Hometown Heroes is free money. Down payment assistance from Broward is free money. Again, as long as you fit within those criteria, it does work as free money.
Wow.
That
Going
doesn't
back
have
to
do
the
that.
Hometown Hero, what is it?
So Hometown Heroes is for, again, that's for the whole entire state of Florida, not just Broward County. It's up to $35,000 for a purchase of a home.
$35,000.
Up to $35,000, correct.
Should I pay it back?
That program does have to be paid back.
Does have when?
Yeah.
Like monthly? Added
No,
to my
that's
thing?
a silent as well. All these loans are silent, meaning there is no monthly payment towards them.
So when should I pay
You
them
only
back?
pay them back like within your 15 years for the Broward County. That's when you have to. If within 15 years you refinance, sell it, or it becomes an investment, you're paying the money back.
When I'm selling it back or anything,
Right.
I pay the money back.
Right, but if it's 15 years, you don't.
So after 15 years,
it's
bye-bye,
it's-
$35,000.
It's down payment. We're talking about Broward.
So
The
I'm-
$35,000 Hometown Heroes always has to be paid back.
Okay, so
But again, you don't have a monthly payment.
okay, let's clarify that.
Yes.
The Broward County down payment assistance program is up to $50,000 for whoever qualifies for it, and it runs for 15 years
15
with
years.
frozen payment. You don't have to pay
There-
anything
there is
for
no
15
payment.
years.
Correct.
If you sell or refinance within those 15 years, you're gonna have to pay it back.
Just sell. If you
Just
refinance,
sell, not refinancing,
as
just
long as
sell.
you're not cashing out, You don't have to pay back.
And you do have to use it as a primary residence,
It's only
not
for
as an
primary
investment.
residence. Remember, all these programs are to help the person wanting to buy the house they live in.
Okay.
It's not for investment. It's
Right.
not for second
Nobody
home.
can capitalize on
residence.
it.
Primary residence.
That's
Stay
wonderful.
15 years, and the 50,000 or whatever amount you get from that up to 50,000,
Absolutely.
it's yours. After 15 years, the whole thing is yours.
That's
You can do
wonderful,
whatever
man.
you
You're
want.
talking
Absolutely.
about
Oh, yeah.
50,000, 35,000, 7,000 for free. That's a lot of money. Like,
I had a buyer who decided to move here just for that.
that's
50,000 is a lot.
I agree. I totally agree with this.
Absolutely.
It's great money, and it's ready for grab. It's on the table.
Wow.
It's available. You just have to call and ask. That's it.
Just
So the
call.
hometown heroes, I thought that this one is only for firemen, nurses, those type of people.
Originally, it was. Originally,
Okay.
in the beginning stages of it. But after that, it changed just for anybody that works in the state of Florida.
Sounds nice.
Just work in the state of Florida. You can qualify. Of course, there's a few things it might be, but you can qualify
Absolutely.
if you work here.
Absolutely.
What if they work here, they stay here, but they work remotely for another company in California?
So
But they're-
no,
they
it has
live
to be. They have to have a location that they work here.
Okay, so they
Okay.
cannot be remotely working.
Correct. Again, they
There
have
you
to have a
go.
location here.
Okay.
But if you work remotely, you have another programs. You have always a program.
Absolutely.
You have a
There's
lot of free
always
money.
something.
Absolutely.
That
We
was
always have a
amazing.
piece of clothes that can fit you very well,
Yes.
like George. here.
Absolutely.
That was
Fits him very
amazing.
good.
Oh my God, $50,000. I will dream with
Yeah.
this money tonight.
No, that's a great amount, and
Yeah, because Durid, he come crying yesterday and told me like, I need $50,000 to buy a
yeah, I was missing 50,000. Now I found it.
I didn't hear this call, so I don't know why. If you needed it, I had it.
I will send it to you.
Yeah.
Well, I think.
We cry a lot.
Wow.
I
We cover a lot of things today.
Well, I think we did great. Now I wanna leave something for our agent friends out there, and I know George, you have worked with lots of agents before. What advice would you give new agents who just hit the market and they're dealing with the Florida real estate market, especially condos? What would you give them an advice that?
You're not going to know everything in the beginning. The idea that you need to know it up front in order to be able to get the knowledge is a myth. You're going to learn it based on experience, but having somebody that has experience, like a lender, on your side, somebody you work with on a constant basis, that person that you can go to for any kind of information, that's what's going to help you move further in this business. Having a constant person that you can go to and ask as many questions as possible, because that's the only way you're going to learn about how to deal with purchasing real estate or helping your buyers, investors buy here in Florida.
I agree with
That's
you.
so true.
No, I agree with you. So if there is some real estate agent here working in Florida, if you really don't have some good lender watching your
Call
back,
me.
of course, call George. That's what I was going to.
Yep.
But you interrupt me. No, but you have it. Please, you have it. No,
I
you
have
have it.
one.
Please,
I have
you
at
have
least
it, because
one.
it's the last
That's the
one.
last
This is the
one.
last one.
That's the last
So
one.
I was saying,
All
if you are a real estate agent, of course you need really a good lender to watch your back. And for me, that was George for a long time. For Durid as well.
That's right.
So if you want George to watch your back, he's really good watching. So
And
he's really good.
eventually, any new agent, the main goal for them, it will be helping their client get the best deal possible.
Absolutely.
And avoid the pitfalls and challenges of getting into that place and secure good financing. So you literally gotta have a lender on your side, a partner that you can team up with on each transaction. That would be ideal and beneficial for both of these.
I can't
people.
stress it enough how important that is, and how important it is. You guys, we're always talking, we're always, discussing different ideas, different scenarios. That it number one, it sharpens me to remember, my guidelines, my options that I have available. But it also helps you guys with the knowledge, like you guys said, to understand what's going to be beneficial for the borrower.
I totally agree with you. I cannot add more.
Wow.
That was
That was-
nice.
Yeah.
That was really
Ton of
really nice.
information. I love it. I learned a lot.
I did.
Thank you
So
very
did
much.
I didn't even
George.
know I had all that stuff in my head.
Right?
Did you know that I cry every night was Durid? You don't know
That
that.
was too much information.
That's why he cries. We get so much information every day.
That was so fun, George.
Yeah.
Thank you so
No,
much.
literally, thank you for coming in. Thank you for sharing such great knowledge with us and with our audience. Guys, if you find this helpful and enlightening, if you think this is good information to prepare you and keep you informed to take an informed decision, you can subscribe and be tuned to our channel, because we're gonna have weekly episodes every now and then, and we're gonna be one more time with
One
George.
more, that's it? I don't mind coming more.
one more time
You
in a short time.
Oh, okay,
But
okay.
in the
Good.
future, you're one of the in-house team, man.
Just
Yeah,
remember
we
this
can.
when you're trying to come again. No, I agree with Durid. And I mean like really stop bothering calling. Either me as an agent or as a lender as George. Just pick up the phone and call.
Absolutely.
And if you have any special questions, anything, you can leave it down in the comment or just like call and ask directly. And we are here to answer. I mean, that's what we do for work.
I agree. That's always been my business. That's why I've been doing it for so many years, because that's the one thing I love to do is answer my phone, pick it up, make sure I'm there for that person.
This
You know?
guy, every time
I
I
was
call
going
him,
to say that.
every time I call him, he's like, "Hey Leo, how are you doing?" Like,
He's crazy
please
with
don't
answer.
answer
He
one
always
time.
picks up. He
And every
always
time he
picks
call
up.
me, I don't answer.
Yeah,
I don't know why. I'm sorry.
We're gonna leave
I'm
his
sorry, man.
his information down in the description. Not his number. Should we?
You
leave
could-
his-
you could give my
We're gonna
number, absolutely.
This guy answers. This guy
Yeah.
answers his phone.
And it's
So-
even, and I tell customers, please don't be afraid to call me on the
Don't bother.
weekends. Don't on the weekends, on holidays.
days a week, club.
It really has never bothered me. I've been doing this for so many years that it just does not bother me. It's
a part of your
It's part of
lifestyle.
my life.
Yeah.
It's really, I enjoy helping customers. I know sometimes the better time to talk to me is when you got off work, when you put the kids to bed, when it's the weekends. That's what I'm available for. That's always what I've been.
And
you know.
we literally appreciate that a lot as agents, and I do speak of our buyers that they appreciate that too. Thank you very much, George,
Sure.
for being really responsive and picking up all the time. We're learning from you. We're trying to pick up. We do pick up 99%, but that 1% you beat us to.
He does. He's a
we're
superhero.
gonna get that
remember?
too.
He's a Superman.
He is.
He is a Superman.
Well, thank you again, George.
Thank you guys for having me. I
Yeah.
appreciate it. It was good.
That was
sure.
good.
Yeah.
Yes.
You did
Thank you,
amazing.
guys,
Yeah.
and we'll see you soon.
Everything
next
down
week.
there. Everything down there.
That's right.
I will give you one. One.
I'll take one.
Take care. Ooh, that was cool. I love that.
What do you think?